All right, what is going on, Discord and YouTube family? And welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is August the 17th, 2025, year of our Lord. And as per usual, we'll be breaking down three of the five instruments that I follow. We'll be breaking down the ES minis, E mini, E mini Dow Jones, and the NASDAQ. If you want to hear the breakdowns of some of the other instruments, you got to join the Discord for that, and the link to the Discord is in the description down below. It's $40 a month, and again, I guarantee it's worth your time. But that's up to you. Anyway, to the free stuff. Let's get into this. First and foremost, if you got to watch the video last week, we talked about the market continuing its rally forward, and well, understatement, right? Understatement. So we're going to start over here with the S&P 500 and break down what we're seeing. We're going to break down price from the 3-month down to the monthly, down to the weekly, the daily, and then I'm going to give my weekly projections on the 4-hour. Notice I say projections, not predictions, but you can use it however you choose. Starting with the monthly on the S&P 500, we can clearly see, or the 3-month on the S&P 500, there's a month, 14 days left. We can clearly see that the bulls are in control, so we're not even going to spend a lot of time there. Ultimately, we came from the April lows, and we've just been rallying aggressively ever since. We go down to the monthly, and again, that scenario is continuing on the monthly. We swept through these lows, and then we continue to travel higher. The market is giving us more upside, higher lows and higher highs. We're not even coming into the previous month candle for the first 2 months. But this month is a little bit different. The month of August is the first month of this rally since April where the bulls had to come down, right? Or the bears came down deeper. We had to dig deeper into the previous month to find more buyers. That hasn't happened since April. So it's significant that we're doing it in a month where the market traditionally takes profit because of tax harvesting. So other than that, however, the dip down still created a higher low, and the dip and the pushback up created a higher high. So again, you still have to give the nod to the bulls unequivocally on the monthly time frame. We drop down to the weekly time frame, and again, it's more of the same. We're getting this consolidation at the highs. We get the sweep of the high, the sweep of the low, the hold of the bull flag, and then a rally up and above the previous high inside of the consolidation. Yet again, very, very bullish in relationship to the weekly time frame. If we take a closer look at the weekly time frame, we think about our potential bearish predictions, right? Or bearish things that we're seeing. The only thing that I've seen was bearish was this weekly candle here, and then this potential doji candle at the top of trend, which could be insinuating a potential evening star. Now, I'm going to say potential because in this market, I would not be trying to front run the shorts to the downside, right? Doesn't mean that you can't trade them. I just would take in consideration that until we at least get below 63.91, the market is going to try to break back above all-time highs yet again. This market has been very resilient. It's been one of the most bullish markets I've ever seen in my short time of trading the futures market. So I'm just going to respect it for what it is until it shows me something different. We drop down to the daily time frame, and again, we can see after breaking the highs, the market is now holding the consolidation at the previous high, right? So this is the previous high. We broke above that high, and now we're consolidating above it. And as long as we hold above this low here, right? Again, repeating that 63.91 level that we saw on the weekly, as long as we hold above that level, then I want to continue to look for small pullbacks to take the market long, right? The second we start to break down below this, then that's going to leave us an opportunity to play this area here. This area here is what you call a volume imbalance, right? An area in which the candle bodies don't touch in between. You create what's called a volume imbalance, right? That level sits on at 63.74 to roughly about 63.55 in regards to the S&P 500. If the market comes back to this area, you would really like to see the market hold this range because of the fact that it's a volume imbalance, but also because of just simple structure rules. If we take 50% of the previous high to the previous low, then the market comes back down to the golden pocket between 61% and 50%. On the daily time frame, that level is also the volume imbalance. Maybe it's by design, but I don't think so. I think it's all algorithmic, and this is just following the algorithm as it plays by the rules, right? So therefore, what will we be looking for? Let's bring those levels back one time. If we can get a strong pullback out of this market, coming back down to the 6374s, maybe coming back down to the 6300 levels, right? That would be awesome in relationship to a pullback. Why do I think a pullback is imminent? Well, you got to stay tuned to the video to get my thesis on why I think a pullback is imminent. Let's drop down to the 4-hour, and you can see time is fractal. So even though we're seeing bullish on the 3-month, bullish on the monthly, and bullish on the weekly, the correction, if there's a correction coming, you're going to start to see it on the lower time frames first, and then it's going to develop more macro, right, as it develops on the smaller time frames. So the 4-hour time frame is the very first time frame. If we turn on our 200 EMA here, it's the very first time frame. Well, not 200. I want to turn on the 9. Sorry. It's the very first time frame that I really pay attention to the 9 EMA kind of price breaking below the 9-day moving average, right? So us getting below the 4-hour 9 EMA is very interesting to me. I want to see that continue to the downside, at least until we get down to some of these levels that we'll break down in the top-down analysis levels. So let's bring out those levels and discuss exactly where I'm looking to trade for the week. Okay. So this is the weekly time frame, or the 4-hour time frame, and our weekly projections for the S&P 500. And again, the thesis is always going to be the same for me, right? In order for the market to trade up, I like to see, or in order for the market to trade down, I like to see it trade up first. In order for it to trade down, I want to see it, or trade down, I want to go see it trade up first. In order for it to trade up, I want to see it trade down first, right? So we're already starting that downtrend, which again, if you're a bull, this is actually good. This big candle right here is the CPI candle. The market usually comes back to at least rebalance this particular candle. Well, if we zoom out, right, to like the 6-hour time frame, then we have a nice strong demand zone that was formed. Aggressive buying coming off that CPI candle while breaking the previous high, consolidating above these highs, and now potentially coming back down to retest these highs. So if I'm looking at the market, right, from the perspective that I am, the first thing I want to take a note of is where that in-wall is, right? So the new week opening gap sits right below the weekly fib, which was put us automatically in discount. So in that case, this is where I'm going to be looking for the market to come to first. Therefore, my weekly projection is the first one. We're at plus or minus 2.62% for the week. So our weekly projection from 6422.75, which is essentially inside of this in wall, takes us up to 2.62% into 65.91, right? Our weekly projection bullish, our secondary level, is if we trade straight through this in wall, we still have this 6-hour demand zone that was formed, and that level sits at 64.11. We trade down to 64.11, and then we start to rally back up. And then our 2.62% target for the week would be 65.6850. That is my bullish prediction on the S&P 500. Let's get to my bearish prediction on the S&P 500. Remember, if we're going to be bearish, I want to see the market trade up first. If we come down to the 1 hour, you can clearly see that we have an inefficiency above us, meaning price did not close this gap here at 64.91. That is our resistance zone. So from that level, 2.59% down, we're looking at a push down to 63.2350, which is the exact level we just discussed on the daily time frame, right? When we look at the objective here, if the market really wants to get bearish, then sometimes it won't trade up first. It'll create an imbalance, a volume imbalance, or a gap down. If the market gaps down, then I'm going to set the level at previous day low. From the previous day low, I'd be looking for downside targets of 2.60%, targeting 63.0350 or the RTH gap from August the 4th, right? Seeing that gap close would actually be, again, bullish for the market, because that means it can continue back to the upside from a technical analysis standpoint. Those are my levels for the S&P 500. Let's move over to the next instrument. All right, that brings us over to the Dow Jones, right? So we're going to take a look at the Dow and break down the levels from the 3-month. Again, unlike the other instruments, the Dow Jones still has upside potential. Not saying that the others don't have upside potential, What I should say is that there's highs that have not been taken. And this is with B adjustment on. If you turn B adjustment off, you can see that we slightly got above those highs already. I turn it on in this situation because it gives me more structure to play with, right? Once we get up here and we clear it, then I'll go back to the regular contract. B adjustment basically averages out the contracts, all of the contracts together, and gives me that particular average of price action. Therefore, I still have highs with B adjustment on. And this becomes accurate by very nature. So the target can still be on the 3-month time frame, 46,334. On the monthly time frame, you can see bulls defended the monthly fair value gap. There was a gap between 43,257 and 43,967. The market traded back into that area, slightly closing the gap, and then continued back to the upside. That is telling me that at least for the first portion of the month, we're remaining bullish. We're putting in higher highs, we're putting in higher lows. The market is still bullish, no matter what the thumbnail may say that may lead you to clickbait this thing, no matter what, okay? Everybody wants this market to sell off. That's probably why it's just gonna keep going, right? Until we're all in mass euphoria and nobody wants to short the market anymore, that's when they'll probably start to sell it off, okay? The weekly time frame. Again, it was the only instrument that gave me pause to calls to the downside because of this candle here breaking through this previous low. Well, they recovered, balanced out, put in a higher low, and now making a higher high above that candle. Therefore, later, I would expect for us to get above 45,222, start to use it as support, and then use that to target these equal highs at 859 and then all-time highs at 46,320. Again, another segment of time, i.e. the weekly time frame, that I would give the nod to the bulls. We go down to the daily time frame. Again, same thesis here. We left behind this beautiful fair value gap after the rally from last week, 44,418 through 44,497. So we could even afford a nice pullback back into this area. We might not get it because we created another daily fair value gap between 44,615 and 44,780. That is the area where I would be looking for price to most likely come back to. This area right here would be a beautiful daily fair value gap, and I'm pretty sure I got it covered on the 4-hour time frame. If I don't, I'll add it into my thesis moving forward. Okay. To the downside, well, the downside doesn't start until Dow Jones gets below 44,025, right? Call it 44,000 flat. But as long as we're above, I think it's 44,777 on the Dow Jones, the market has been very, very strong above and below that level. So as long as we're above that key level that I'll show you on the 4-hour time frame, I expect more upside from the Dow Jones, right? But currently on the 4-hour, I will repeat, on the 4-hour time frame, the market is giving signs of turning bearish, whether it be temporary, whether it be continuous. I'm just giving you what I see out of price action right now. Signs of that. We came up here, we traded back down, and we're slowly trying to push below the 9 EMA. Now, it's not officially bearish until we break through this low. That's when we'll know that the market is starting to put in lower lows. Right now, it shifted its order flow, but it's still inside of bullish character because this low is still intact. If it gets below, you guessed it, 777 and continues, I expect more downside on the Dow Jones, going back to retest those previous highs that we talked about earlier. Now, let's bring out our levels for the week, and I'll give you my weekly projections on the week for the Dow Jones. All right. Okay, so we take a look at the Dow Jones, and again, it's setting up very, very similar to that of the S&P 500, and that usually happens, right? Therefore, our thesis here remains the same. In order for us to go down, I expect the market to trade up first or gap down. In order for us to go up, I expect the market to trade down first, which is also a gap down. We're in a bullish market. The market's been doing nothing but trading higher. I don't expect much more but the market to go up higher until bears actually show themselves, okay? So what are we looking for? We come down to the 1-hour time frame, and our plus or minus for the week projections are 3.02%. Again, those weekly candles are getting smaller, which is another sign that maybe, just maybe, the buyers are drying up. But again, they just keep doing it. So I'm not going to bet against them. I hope you don't either. But weekly projection from the 4-hour demand zone. So if we come down here, we have a 4-hour fair value gap, and then we have a 4-hour demand zone. Okay. The 4-hour fair value gap reiterates that level that I talked about on the Dow Jones, which is 44,777. If you're a Dow Jones trader and you don't have that level on your chart, I strongly advise you putting this level on your chart. Therefore, I like to see the market trade down, sweeping this low after running these highs sequentially. That's exactly what we should do. Trade down below this low, create the new dealing range from this high down to the 4-hour fair value gap, holding the weekly fib intact, and then rallying up 3.02%, targeting 3%, targeting 46,113. Secondary level from the 4-hour demand going down about 44,600, right on the money down here. We trade down, we get below the weekly fib, we hold above the monthly settlement, we start to target back above the 44,077 level, targeting 3.02% into 45,945. Okay. To the downside, the opposite is true on the 1 hour. We still have this imbalance here, which is exactly what I would like to see the market trade up to and close. We go up to this level at 45,215. And again, our weekly projection is about 3%, 2.97%. Just depends on what the price range tells me, right? From the 1 hour resistance, 45,214, we're looking for a target of 43,880. This level makes sense to me because we would get below this level, the weekly fib, close all of this structure down here, and this weekly fib hasn't been mitigated, and then get right down to this 2-hour support level to start the rally back over again. Basically kind of resetting price action, that's all, and picking up more buyers along the way. From the previous day low, i.e. we get a gap down and we keep going. Previous day low sits at 44,981, so the target would be 2.99% down to 43,633. And again, if we get this low, the market could continue to go further down depending on what the reason is that we get this low. I'll break down some of that as we get through the volatility index. But for now, those are my levels on the Dow Jones. If you stick around, we're now going to go into the NASDAQ. All right. So the NASDAQ price action. Look at the 3-month. I'm not going to continue to beat a dead horse. The NASDAQ has been very, very bullish, right? It's all tech, and tech is about 87% of the reason why we're up at these all-time highs. So of course, the NASDAQ is leading the way. You can see, just like every other instrument, it's been very bullish on the monthly. And then again, August sold down into the previous month for the first time in a while. And now we're making new highs yet again, right? Monthly time frame goes to the bulls. Weekly time frame definitely goes to the bulls. But things to note from the bears is that they created this same doji candle at the top of trend, which again could be the start of a morning star pattern where we then again would target these lows, aka 22,775, coming into this fair value gap of 22,022 through roughly about, what is this level here? 22,582. All right. We come down to the daily time frame, and again, you can slowly start to see the bulls or the bears coming into this daily demand zone here. They're targeting this daily demand zone. If they find buyers here, we're just gonna go right back up, right? Just right. If not, we should be looking to target, or we should be looking to trade down below 23,590. And again, I'll keep reiterating between the NASDAQ and the ES, this little level right here. This is a volume imbalance between 23,368 and 23,304. This particular level should hold price above and below. It should act as strong support above. It should act as strong resistance below. So the market should look to target this if it gets below these equal lows, coming straight down to 23,368. Now, would that be in 1 week? I don't know. Just depends on what the catalyst is, because whenever the market starts trading down, depending on that catalyst, these weekly projections are going to get blown out of the water, because these are very, very low weekly projections, right? Like for the instruments that we're trading, like these projections are very weak. Just putting that out there. So at some point they're going to get expanded. All right. So the 4 hour, again, we're looking at that 9 EMA. It's the trending EMA, right? It kind of tells me that the market is still in whatever trend that it's begun. It got above the 9 EMA on the 4 hour, and now again rejecting the 4 hour time frame, which leads me to believe there could be more downside potential. Now, downside potential does not mean a reversal. The candle that we're trading into is the CPI candle. Like, this is a very important candle. So to take this candle out, there should be a lot of buyers inside of this candle to defend. That's just a little sidebar note right there. All right, so let's go down to the weekly projections for the NASDAQ. Going down to the 1 hour, we still have that 1 hour resistance. It was closed on the NASDAQ, but there's a little bit of inefficiency between 2388 and 23881, right? So I definitely wanted to leave that there. But our downside and upside predictions to the upside. If we're going to go up, I want to see the market trade down into this 1 hour fair value gap or trade down into the 6 hour demand zone. From the 6 hour demand zone, you can see from this level, 23,676, we'd be looking at about 3.38%, targeting 24,476 for our weekly projection. Our second weekly projection would come from the 1 hour fair value gap, sitting at about 23,506, targeting about 3.4%, up to 24,304.50. To the downside, you want to see the market trade up to come down. So the market would tap into the 1 hour resistance here, chessboard high, or whichever one it decides, targeting about 3.36% to the downside of 23,079.75. Secondarily, we look for a gap down, no closure of the gap, meaning we could use the previous day low as resistance, and then targeting 3.38% down to 22,930, getting below the weekly fib or the previous week's fib, the monthly fib, and then targeting this demand zone here on the 6 hour. All right. Those are my levels for the indices. Let's take a look at some of the reasons why I'm kind of feeling the bearish side, right? Like when I say feeling it, I mean, I just want the market to sell off, right? Like, so I'm looking for ways to figure out a way for the market to sell off, right? Which is, I think everybody's dream is to be like, the market's got to come down, especially right now. The market's just been so bullish, right? Like it's just annoying almost. So the volatility index is basically my only saving grace next to Jerome Powell, which I'll get into that here in a second. But we look at the volatility index and we can clearly see that the VIX has been getting knocked out, which would be an understatement, right? The VIX has been getting beat down. So right now we did get a gap up, but the gap up is usually happens once a month. The VIX has contract rollover every single month. Therefore, this gap right here is just the contract rollover gap. Now, a lot of times what I see is one of two things. If the market is very, very bullish, they're just gapping this up so they can have room to go higher. So they trade down into the gap. If the market is very, very bearish, then we'll hold the top of this gap, which it appears, we did a pretty good job of that on Thursday and Friday. We'll hold the top of this gap, get above the weekly fib, and our first target again will be these the 20.4s, and then the 23.29. The reason why I think we're just going to continue back to the downside on the VIX, again, I don't want to say this, but this is the most likely scenario. It's because of this guy right here, right? I'm going to turn off everything on my charts. And it's this weekly fair value gap right here. The market's probably going to look to close this, right? And when it closes this, it's going to rally the markets back up to the upside before finally finding some buyers. Little note on the VIX, it really doesn't like to hang out below 14 or 12. Like once it starts to get down here, then I'm going to get really, 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 really bullish. Really bearish. I'm sorry. The lowest the VIX has ever been historically was like 2017. Don't ask me what's happening then because I don't know, but it was at 10.22. But historically, like lately, the market doesn't like to hang out below the 14s or 12 mark. So once it starts getting down there, then I'll definitely be looking to be a bear. So that's literally my only thesis for the bearish side. Like right now, everything is looking on the up and up on the higher time frames. So you just got to follow that until the market gives you other reasons to sell. All right, moving on to the news on the week. It's a very, very scarce week. So let me just share this screen here. For some reason, my computer is frozen here. Give me 2 seconds. Oh, there it is. All right, now we're back alive. There we go. Okay, so this week, the market has a very limited amount of news, but there is one big piece of news coming into Friday, which we'll go over here in a little bit. But Monday, no real news on Monday, just housing market index. Tuesday, we have, again, no real news on Tuesday as far as red folder goes, right? And then Wednesday, we have the FOMC meeting minutes. which I'm sure the market will react to because everybody's on edge on whether or not we're going to get a rate cut, right? And then Thursday, we obviously have unemployment claims, followed by flash manufacturing PMI, which could potentially move the market. But again, really not a lot of news. And then Friday is when the market should get really crazy. I'm expecting some real fireworks between Friday and next Wednesday. So Fed Jerome Chair Powell speaks at what's called the Jackson Hole Symposium, right? And if you haven't heard of this symposium, basically is just like having Jerome Powell speak at any press conference. He's gonna tell you, he's gonna be asked a lot of questions at this symposium about the economy, about where things are headed, about interest rates, all of that good stuff. So the market will be tuned in. That's why this is red folder news. And I guarantee Trump's going to be tweeting his butt off in between this speech to try to save the market from going the direction that it should be going in my opinion, right? Then going into the next week, just mentally start preparing yourself. We also have NVIDIA earnings on next Wednesday. Now, that's nothing we got to worry about this week, but next week, the market will be preparing itself for that this week in preparation for next week. So keep those things in mind from a context standpoint. But other than that, man, it's quick, easy, and dry going into this week. I hope this was helpful for you. If you're interested in joining the Discord, like I said, the link is in the description down below. But by all means, take as much of this information in as possible. My name is T Hobbs. This is the Trader Shop, and I'll catch you guys on the next one, man. Peace.